Hi, my name's Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, let's turn first to the share market. Shares were rattled in early July. Two things happened. Firstly, it looked as though Greece might fall out of the EU. As I mentioned last month, this was a possibility, but of course eventually Greece and the Germans did a deal, and for the time being Greece stays in the European Union. The other big issue was a bit of a collapse on the Chinese share market. At one stage it had fallen 30%. However, investors have decided to look more at the performance of the American economy and the fact that the Chinese economy is also trucking along pretty well, even though Chinese shares aren't all that good. As a result, the share market has improved late in July. The Australian dollar has hit new lows, 72.5 cents US as we speak. It's believed that the Reserve Bank wants to see our dollar back at 70 cents US. Now, this is important for property investors because, as we have discussed before, there's a lot of property buying coming from overseas. The lower the A dollar goes, the cheaper local houses look for overseas buyers. The median house price in Melbourne had an excellent quarter to the end of June. The average price was up 5.2%. Can you believe it? The median price in Melbourne is now $706,000, and in inner and middle suburbs, well, let's be honest, the starting price is pretty much $1 million these days. Clearance rates have slid a bit during this very, very cold July. As a result, we're now seeing clearance rates of about 75–76% versus the low 80s that we saw during May and June, but nothing really to worry about. The Australian Prudential Regulation Authority is also trying to wind back the housing market a bit. It wants banks to hold more capital on their balance sheets in relation to the volume of home loans that they have. This has caused several of the banks to lift their interest rates for investor home loans. So, for example, both the ANZ and the Commonwealth Bank lifted their investor variable rate 27 basis points to 5.65%. The National Australia Bank followed with a 29 basis point increase, and Westpac is still trying to sort out some software issues which prevent it from having a different interest rate for owner-occupiers versus investors. Now, at the moment, owner-occupier home loans haven't increased in price, but I reckon it's not too long before the banks think about doing that. Also, the Reserve Bank, I still think, will cut official interest rates further, but I'm not sure much of this will flow through to home loan rates. However, it will flow through to the foreign exchange market. I mentioned earlier that the Reserve Bank really wants the A dollar back down at 70 US cents. Bad news for holiday makers, bad news for internet shoppers, probably good news for our property market. Remember, if you're thinking of buying or selling a property, either as your own home or an investment, don't hesitate to contact your local Hodges office. Their assistance can only add value to the process. For more information, go to hodges.com.au. I'm Tom Elliott. Thank you very much for your company, and we'll look forward to doing it again, same time next month.